Hey everyone, and welcome back. Now today we're going to be talking about the 5 rules that you should know before potentially getting into an alt season to make sure that you're best positioned to be very successful and win. So obviously we don't know if an alt season is coming or not for sure. There's really no way to know for sure. But one thing that you should know is if one does happen, it's always better to be proactive than reactive. So if you do have that belief that we will see an alt season, it's best to probably position yourself early instead of late. Then obviously if you don't believe an alt season's coming, totally fine. Then maybe you could just ignore this video or maybe even just stick around, because I do think a lot of these lessons really do apply just to overall investing within crypto. You could even, I guess, apply this to stocks, commodities, whatever you end up trading. But these are all very, very important rules that can keep you safe. So with that being said, I want to start with kind of diving into the 5 rules that you really do need to know. Now keep in mind, this isn't going to be a comprehensive list. If there's anything you disagree with, if there's anything that maybe you think I missed, anything like that, just drop them in the comment section below. I'd love to hear. So many of you leave really, really good comments, and so I do like hearing from you guys. I just drop those in the comment section below, and we can kind of discuss those. And if there's anything that I missed or enough that I missed, maybe I'll even create like a secondary video adding on kind of some other rules that you can know about alt season. But anyway, let's go ahead. We'll dive right in and start talking about the first rule, which is diversify. So the thing that's important to know about diversifying your crypto portfolio is there are some people that really kind of focus very, very heavy in just a handful of crypto categories, or even just a handful of crypto individual projects themselves. And obviously, if you win, then you're going to look like a genius, and the wins obviously become a lot larger, but there's a much, much higher likelihood given that you may potentially lose. And so the thing that I always like to think about in crypto is I personally am very ultra long-term bullish on crypto as a whole. I can't really tell you, this project's going to win and this project's going to lose and all that type of stuff, just like nobody else can, right? I mean, if we all knew, we would just only invest in the winners and leave the losers alone, right? I mean, that's a pretty obvious notion, but it's important to understand that, because I feel like that kind of gets lost sometimes when we have the type of trading mentality, all that type of stuff going on. And so in my opinion, if you are long-term bullish on the crypto space as a whole, you should just be focusing on essentially trading the asset class, not necessarily like individual assets. That's my opinion. And one of the best ways that you can figure that out is, like I said, by diversifying. And you can check out something like CoinGecko's crypto by categories. So you can see here there's a whole bunch of different categories here within crypto. You've got smart contract platforms, layer ones, proof of works, proof of stakes, made in the USA, the portfolios of various different investors, things like that, stable coins, fiat-backed stable coins, exchange-based tokens, centralized exchange tokens, DeFi, memes, liquid staking, you get it. I mean, it goes on and on and on and on and on. So you can kind of pick some of the industries or the categories that you might be most long-term bullish on, and just try and get a handful of what seem to be some of the top performers in there. The wider you cast your net, obviously the more losers you're going to have, but the more winners you'll have, and your portfolio as a whole should benefit, assuming crypto as a whole benefits, and is kind of long-term bullish like I'm expecting. So that's the first one. Second one I wanted to get into is do not chase pumps. This is very, very important here. We will actually take another look at a quick chart here just so you can see kind of what I'm talking about. And so obviously, this is a recent move that we've seen by Onyx Coin. Onyx Coin's one that within the span of, I think, like a week, I guess it was like 11 days, it did like a 20x. Really, really crazy move to the upside. Pretty impressive also. But the problem here is, and we could even use like something like XRP as another example if we wanted to, but I'm just using a fairly, at least recent, as of the time of this recording, example to show you why this can be a little bit of a scary proposition. So if you start chasing the pump, let's say here, probably a pretty good thing, right? I mean, especially if you're getting out here at the top, like still decent. Even if you're holding and you held all the way down, you're still up. Even though you may have bought the actual all-time highs at this point, it ended up being very, very low comparative to what we've seen so far. So always something to remember there. But keep in mind, we don't actually know where the top's going to be at this point in time, right? I mean, here we could have, this was what, almost a 10x. Is like a 7 or an 8x from here to here. I mean, that's a huge move in a very, very short period of time. And so in my opinion, this is probably not something I would have bought. Now, this is not a TA video, so I'm not going to get too far into it, but we could see at this point in time, there was a little bit of consolidation going on and a bit of a wedge forming, at which point we did actually see the breakout to another huge run to the upside. If I would have seen that, potentially getting in here would have been a good idea. But whenever you only see green candles like this, I get very, very nervous. I think that's usually a recipe for disaster if you're just buying in. Because keep in mind, you could have bought here, you could have bought here. I mean, there are people who bought here. I mean, that's why we have this wick, is there were buyers for every seller. And if you were buying here, then obviously this play did not at all work out for you. So you need to be very, very careful with chasing pumps. We will caveat this a little bit when we get to our fifth prediction. So stick around a little bit later in the video and we will get to that fifth prediction that kind of caveat some of this a little bit. But just kind of as a general rule, particularly if you're new, I would say chasing pumps is historically a really bad idea. So maybe just think a little bit before you go too crazy chasing things like this. Just as you can see, I mean, if you would have bought close to here or even here, like you're still likely down at this point in time. So not necessarily the best thing to do. And even from like a risk reward perspective, you buy it 3 cents, it goes to 4 cents, you're up 50%. Woohoo, right? But like the risk reward at this point in time is very, very risky compared to very, very high on the reward side, where something right here may have been a little bit lower on the risk and a little bit higher on the reward, which is of course what we're always trying to maximize. So anyway, that is the second kind of like rule or tip that you should be using when you're looking to trade in alt season and be successful. Now the third and fourth are kind of very similar, but we'll start with one at a time. The first one is going to be make sure that you set take profit rules. Now I'm going to use Bitcoin as an example here. We can see here's the Bitcoin chart. I'm going to use Bitcoin as an example because you need to generally have an idea of what you're looking to get out of a trade. That's not to say I will only buy here and I will only sell here, right? But you need to have a general idea of, okay, we're looking at the Bitcoin chart here. We've seen it's kind of had a really strong recent kind of run up in price, but since probably like the beginning of, or I guess the middle of November, we've seen pretty much kind of some ranging within this various area, primarily between like the 105 and like the 91,500 range. That's where most of the price action has been over the past several months, again, as of the time of this recording. Now, that's good, right? But what are we looking out for out of this trade? Now, if you're bearish, maybe you're looking for another pump up to this level. Maybe you take a short and look to ride it all the way down to some of these lows, maybe 70, maybe 85, maybe even getting down to things like 52, 53 range. All of these are possibilities, but you need to know kind of what you're looking for. Now, if you're bullish, maybe you're looking to get in here. Maybe you're looking to see if we can find another wick down at this range, because we have seen several of them at this point, so it's not out of the question. But then what's next, right? Are you looking for, what do we think the cycle top of Bitcoin can be? Do we think it's 120? Do we think it's 150? Do we think it's 300K? Do we think it's 500K? Hard to say for sure, but you need to have a general idea. And usually the best way to prevent FOMO is come up with a range that seems to make a little bit of sense, but then obviously be flexible as you're kind of going through and more news is kind of presenting itself within the market. So let's say, you think, given the overall sentiment of the market right now, you think a top's going to be anywhere between 120 to 150. Obviously, when you get to 120, the safest thing to do would just be peel off a little bit here. Of course, we are using Bitcoin, so alts are this isn't necessarily going to be super applicable, but this is essentially applicable for all alts. So I'm just using Bitcoin as an example because it's the biggest crypto, and I think people generally have a good idea here. But you need to figure out a price. Now, generally, Bitcoin, if we're looking at where we're at now, 150, that would be about a 50% increase. Also, you're probably looking at 2, 3, 4, 5x depending on how big of an alt that you're investing in. So let's just say we're looking at 150, and that's where we think our first price target's going to be. Okay, well, when we hit here, let's pull out 50%, right? We're going to be basically, if we pull out here half and then we leave our stop loss, let's say entry, which that's number 4, we'll get to that in a second. We leave that at entry, you're basically guaranteeing profit. There's no way you can lose on that trade. Now, of course, we can start to get a little greedy and hope we see maybe 180, maybe 200, maybe even get up to the 250 range. Who knows, right? But at least if you're selling half, let's say at the 150 range, or in an example that might be more applicable directly to alts, let's say every 2x, you just have a hard rule. Every 2x, you sell half. or every 3x if you want to be a little bit more aggressive, you sell half. And then at that point, you're locking in either your initials at 2x or initials plus 50% at 3x. Then from there, you can kind of make your decisions of what you want to do. You can hold the rest to 0. You can peel off, maybe 10% every extra x after that. Totally up to you in terms of how you want to do that. I would say give yourself some leeway to be a little greedy, because if you don't and you sell way too early, you may find yourself FOMOing back in. So I would probably say don't ever intend to sell or to sell 100% of your bag. Maybe always keep 10 to 20%. You're going to miss the top almost certainly, but at least you don't do anything worse to yourself by revenge trading and FOMO trading and all that type of stuff. So very important to consider that there. Now, on the converse side, like we were kind of hinting to a little bit earlier, you also need to have a stop loss. You need to make sure that you understand kind of what you're doing. When does a trade lose? Going back to this potential Bitcoin trade here, we can see, it doesn't have to be like if Bitcoin drops below $91,521.20, I'm selling everything, right? It doesn't have to be that, right? But generally what we can see here from the Bitcoin market structure is that we're seeing a general level of consolidation at this point. If we break out of this like level that we're holding here and we start to move down to 85, and then maybe we break out from this and we start to move down to 73, I think it's somewhat fair to say that perhaps we've seen kind of like a double top here, and we're likely going into a potential larger pullback, and it could be years, months, whatever, who knows, until we start to see Bitcoin prices back at this level again. So with that being said, you need to understand kind of when does this fail, right? Does it fail when we break out and close maybe a couple of candles? Because so far we've really only seen wicks outside of this like zone that I've drawn, right? Is it maybe below this level? Is it below 85? Is this kind of the point where we can comfortably say that the bull market is over? Figure out what that means to you, what that looks like for you, and then make sure you stick to it. Like I said, it does not have to be an exact number, but if the overall structure of the market is not playing out like you're expecting it to, then set your rule, make sure you stick to it, and stay disciplined, because if not, you may be bag holding all the way down to the bottom. Again, we're using Bitcoin, so not necessarily the best example here, but a lot of alts go down 90, 95, 99, 100% in bear markets. And so you really don't want to be caught as a bag holder. It's better to take, the 40, 50, 60% loss potentially if you know that the trade is not going to play out, and just move on. The kind of sunk cost fallacy is something that will get you, and it will get you really hard in crypto. So just be very, very careful with that. Now, if you are looking to trade during a potential upcoming alt season, or maybe you just want to stick to the ones that stick to Ethereum, stick to Solana, stick to Bitcoin, maybe take some low leverage trades. I've heard several people mention that, maybe low leverage trading could potentially provide you similar returns to what you may see in an alt season, but with substantially less risk. Again, that's a caveat because leverage trading has a whole different risk all its own. So you need to be very, very careful with that, but it is potentially an interesting idea. So if you are, I do have the link to BTCC in the description below. If you are interested, like I said, they are doing the 10% bonus on first time deposits. So it's a really, really good deal. Great way to get some free money if you are interested. Also extra bonuses of up to $10,055 per user if that's something that's interesting, as well as no VPN or KYC necessary. Again, if that is something that's important to you. So like I said, just check the link in the description below. Go on ahead, check out BTCC if you are looking for a place to trade, whether it's some of the the big ones like Bitcoin, Ethereum, Solana, or even like some of the smaller alts. All right, now the last tip that I want to talk about here may seem like a little bit of a cop-out, but just hold out, hear me out for a second. I swear it makes more sense than what I'm about to say, but it is to do your own research. Now, I kind of alluded a little bit to this earlier on in the video when we were talking about Onyx chain, or Onyx coin, and we saw kind of all of this type of stuff going on. Part of the reason why doing your own research is so important is because it gives you context as to what's actually going on here. If I'm just looking at this chart in a bubble and I have no real idea of what's actually going on here, I don't is this a good price? Is this a bad price? Is this a good price? Is this a bad price? I have no idea, right? And a lot of people who are trading purely on speculation, they don't either, right? And that's why some of these people are getting wrecked here. But the important thing to understand and to note here is you need to understand what is going on here, because if this is purely just a movement based on speculation, it's tantamount to gambling, right? I mean, if you come in here, you might be timing the top, you might see something like this. You have no idea. if if it's all like, if it's based on some like fundamental news, then you might say, okay, well, this price here, what's the market cap of this coin? I don't know. I don't actually know the market cap of this particular coin. Well, what could it go to? This amount. Okay, well, the like risk reward still seems pretty good, and so you can expect something like this. Again, you can't ever expect anything in crypto, but I think you understand what I'm saying. Now, that is essentially really important, and that's why it's so essential to do your own research. Like I said, I know it sounds like a cop-out, but hopefully my explanation here kind of makes sense as to why it's so important. It's because if you understand why this is moving and where it could potentially be finding a top. Again, with speculation, it's always hard to know for certain where we could be finding a top, but generally the crypto market kind of has biases and attitudes of its own in terms of how high things can go. And so, if you're buying in on something that's a $20 million market cap and things like this routine, let's say, for example, it's an AI agent. If you're buying in on something that's a $20 million market cap, and these AI agents we've seen routinely run to $100 million, $500 million, $billion market caps, then maybe it's not a bad idea to get into them, because you know that the ceiling on them is very, very high. But if you're getting into something that's an $80 million market cap or a $90 million market cap, and you've seen things where they routinely kind of run to 100 million, sometimes maybe 500, sometimes maybe $1 billion, the risk reward becomes a lot less like nice there, because what you're seeing is you're seeing just that typically the price is only going to go up maybe another 10%. Maybe you could see, a little bit over a 5x. Maybe you could see a little bit over a 10x. But again, those are very uncommon. They're kind of the exception, not the rule. And so that's when that kind of the calculus changes a little bit. Of course, you can always get lucky, but again, that's gambling. That's not being a smart investor that's winning alt season, right? So those are my 5 tips to succeeding in alt season. If you did find the information in this video useful, please do give me a like and a subscribe, because it really, really does help me out. Also, if you have any comments, questions, concerns, thoughts, you think I missed something, you disagree with something that I said, a lot of that type of stuff, just drop in the comment section below. I love to hear your guys' comments, your thoughts, your feedback, all that type of stuff. Of course, I do make these videos to be useful and to be helpful. I'm not just talking into the abyss. And so, of course, let me know, if it was useful or helpful, or there's things I could do better, all that type of stuff. So anyway, thank you guys for tuning in, and we'll see you in the next one.